Welcome to the AI for Career Success podcast by Curt Robbins, where we help you get smarter than your competition. This is episode 128. I'm Fred, and I am joined by my expert co-host, Daphne.
Hello, Fred. We are tackling a pretty high-stakes topic today, one that was actually suggested by our producer, Curt Robbins.
That's right.
It's all about the massive financial commitments and the infrastructure strains that are really defining this AI boom, and we're going to use OpenAI as our main case study.
And we're pulling our insights from a really fascinating discussion on the YouTube channel Patrick Boyle, specifically from the video, Does OpenAI Expect a Government Bailout?
Okay, so let's unpack this. The core question hanging over all of Silicon Valley isn't really if AI will change the world, it's can the world actually afford to build it?
A very expensive question.
It is. So we're looking at what this financial instability and these just insane infrastructure demands mean for the AI tools that you, our listeners, are relying on every day.
And the numbers, Daphne, are genuinely hard to wrap your head around. The scale of OpenAI's plans alone is just staggering.
It's unbelievable.
They've signed more than $1.4 trillion in infrastructure commitments. For data centers, for chips, I mean. $1 trillion.
And that figure sounds more like a geopolitical budget than a corporate one, doesn't it? It's really driving a lot of anxiety in the market.
It has to be.
And when you put that number next to their actual finances, well, it gets even clearer. Microsoft's filings showed OpenAI lost, what was it, about $11.5 billion in a single quarter.
Their worst on record.
By far. And year to date, their losses are north of $25 billion. That's against a projected annual revenue of only about $20 billion. They're losing more than they're making.
So this isn't just an abstract problem for the future, is it? It's affecting them right now. I read their CFO, Sarah Fryer, gave a specific example.
Yeah, the compute constraints.
Exactly. She said the new video model, Sora 2, was delayed by, I think it was 6 or 7 months after it was actually ready to go.
All because they just didn't have the compute capacity. Think about that. Holding back a breakthrough product for half a year, that's a massive competitive disadvantage.
Which I guess brings us right to the political storm that started this whole conversation.
The government backstop. Yeah. The whole flap started when Sarah Fryer floated this, let's say, controversial idea of seeking a government backstop for that $1.4 trillion buildout.
And the market reaction was not positive.
Oh, it was immediate and fierce. I mean, the consensus was basically, why should taxpayers subsidize the world's most valuable private tech company?
It's a fair question.
Right. It raises that whole moral hazard issue. If the government guarantees your business, why would you make good decisions?
So Fryer had to walk it back. Fast.
Very fast. She put up a LinkedIn post saying OpenAI was not seeking a government backstop and that the government just needed to play their part.
And Sam Altman jumped in too, right?
He did. He tweeted they do not have or want government guarantees and argued taxpayers shouldn't bail out companies that make bad decisions.
But, you know, the cleanup felt a little contradictory because just a month before all that, they'd sent a letter to the White House
urging them to double down on semiconductor subsidies.
Exactly. And expand tax credits to cover the entire AI supply chain. Chips, data centers, grid hardware, everything.
So they're not asking for a bailout.
Right.
They're just asking the government to de-risk their entire business model and lower their costs across the board.
It's a very fine line they're walking.
A very expensive one. And it gets to the core problem. The negative unit economics of these models.
Meaning it costs them money every time someone uses it.
Almost, yeah. The costs rise pretty much linearly with usage. It's that old cynical business joke, you know, we lose money on every sale, but try to make it up on volume.
A strategy that never works.
Never. And some estimates suggest a model like Sora 2 might be losing around $15 million a day.
A day. That's just not sustainable.
And as Fryer called it, innovation on the finance side.
And that's where things get really creative. We're talking about deals of NVIDIA.
Right. Right. NVIDIA has pledged up to $100 billion in reciprocal investments. But the really wild one, I think, is the AMD warrant deal.
Okay, let's break that down. My understanding is OpenAI agrees to buy billions in AMD chips. And in return, they get warrants, which are basically an option to buy a huge chunk of AMD stock for like a penny a share.
That's the gist. They get warrants for about 160 million shares. But, and this is the important part, there's a catch.
There always is.
The warrants are tied to massive reciprocal spending commitments. To get that full $100 billion in stock value, OpenAI has to spend $300 billion on AMD chips.
Wow. So they have to spend $3 to get $1 back.
Exactly. Specifically, they have to buy 6 gigawatts of chips.
And a gigawatt of compute is a lot.
It's a $50 billion investment, according to Fryer. $15 billion for land and power, and $35 billion just for the chips themselves.
And there's the real problem, isn't it? That $35 billion in chips.
That's the crux of it. The innovation is so fast, a brand new GPU cluster today might be obsolete in 18 months.
Which banks hate.
They do. It's like asking for a 30-year mortgage on an asset that might be worthless before your second payment is due.
Wow.
The collateral just collapses in value.
And that's why they were looking for a government backstop to make that debt cheaper and easier to get.
Precisely. It was a technical solution to a collateral problem that the private markets just couldn't solve on their own.
Let's take a brief break for a special message from our producer, Curt Robbins.
Hi, this is Curt Robbins. First, thanks for listening. I truly appreciate your support. I want to let you know that I'm currently accepting new clients. My rates are affordable, and I have more than 25 years of experience working for enterprise companies like Microsoft, Northrop Grumman, Oracle, PNC Bank, FedEx, USAA, and Wells Fargo, among many others. If you want to improve your IT documentation and communications, hire me. I deliver fast, know how to use AI to improve efficiency and accuracy, and love going the extra mile to satisfy my clients. Thank you for subscribing and listening. Back to you, Daphne and Fred.
Welcome back to the AI for Career Success podcast.
Okay, Daphne, so before the break, we were talking about the financial gymnastics required just to pay for the chips. But even if they solve the money problem, there's another crisis looming.
The power grid.
The electrons.
Yeah. If the money somehow materializes, the power may not. OpenAI's big project, Stargate, would need 10 gigawatts of power.
And for context,
That's about 10 full-size nuclear power plants, just for one project.
that's an incredible amount of demand to suddenly add to the grid.
It is, and the utilities are already feeling the strain. You saw Amazon file a complaint against Pacificor in Oregon, right?
Because they couldn't get enough power for new data centers.
Right. The utility literally had to protect its other customers. They can't just turn off the lights in Portland so a new chatbot can be trained.
And this creates another kind of risk. The mismatch in lifespan. You build a natural gas plant that lasts 30 years to power a GPU cluster that's obsolete in 18 months.
That's called stranded asset risk, and it is a catastrophe for lenders and utilities. If the tech changes or the AI company goes bust, they're left with a useless multi-billion-dollar power plant.
All of this is really starting to sound like a bubble.
There's a lot of bubble talk, yeah. I mean, NVIDIA's recent earnings were amazing, but there's a real worry that growth rate just isn't sustainable.
And the market as a whole is looking pretty frothy. The S&P 500's market cap is now 175% of U.S. GDP.
Which is way higher than it was at the peak of the dot-com bubble. A crash today could wipe out something like 8% of U.S. household wealth. It's serious.
So if the risks are this high, why the relentless spending?
Because they've framed the whole game as being existential. They call it sovereign AI, a direct competition with China. And once you frame something as a matter of national survival,
the budget becomes unlimited.
The limit is gone.
You know, here's where it gets really interesting for me, and maybe a little ironic.
Okay.
While they argue AI is this vital, strategic national asset, they're pouring billions into models that generate, well, weird anime girlfriends and SpongeBob deepfakes.
The disconnect is, it's pretty hilarious. We saw that recently with Elon Musk's chatbot, Grok, right?
Oh, that was incredible.
It was tweaked to just constantly flatter him. It claimed he was fitter than LeBron James, a better role model than Jesus.
And a better fighter than Mike Tyson.
Right. I mean, serious nation-building capital being spent on that.
So with all this instability, what's the takeaway for the professionals listening who use these tools every day?
You know, for now, this frenzy is actually a gift. The competition is so intense that the models are improving incredibly fast and prices are staying low, often free or close to it.
So for the user, it's a good time. The real risk is sitting with the AI labs themselves and their investors.
Exactly. The big guys, Microsoft, Google, they'll be fine. The core businesses are profitable. The fragility is with the pure-play AI companies that have to finance all this.
And yet, Sam Altman still insists they weren't pitching for a backstop.
Which suggests they're betting the capital markets will just keep playing along, keep funding these incredibly risky deals.
A huge bet.
It is. And if that capital dries up, The bailout debate that Sarah Fryer accidentally started will come roaring back. And next time, it will be much, much harder for everyone to ignore.
Thank you for listening to the AI for Career Success podcast from Curt Robbins, where we help you get smarter than your competition. Remember to like, subscribe, comment, and share. We'll see you next time.